Peter Rose, Longwood currency trading mid-December of 2021, caught by the pin bar. Well, I didn't get caught by it, but it was there nonetheless. And to me, a pin bar is the tail is either up or down. You know, some of them one will call them a pin bar, and the other is a hammer or whatever. But it's a pin bar, and it wasn't that big in relationship to the general ATR during the period of price action that I was looking at. It was a 20 pip. It was a 20 pip move. Well, look, when you're carrying size, 20 pip could be several $1,000s. So you have to be cognizant of this stuff. You can't just say, well, I'm trading 3 minis. So I'm out, you know, I'm out $60 or $6 or whatever it is. It's relative as far as the dollars go, but it's the magnitude of the move that you need to be concerned about. And you know, it's funny the way we see in the standard literature about pin bars is that they're generally considered exhaustion moves. Now, in the pin bar that I'm talking about, it was, let me see, what was that on? Where are we at? We're on the 15-minute. And you see it pretty clearly there. The general knowledge is it a pin bar? In other words, the tail is way up. It's an exhaustion. The price trades way up, buy, and then nobody's there to buy, and the whole thing collapses. That's what leaves the long tail and the short body. So the wisdom is, therefore, that once you experience that pin bar, it's like a swing point. Price has gone up as high as it's going to go. Nobody wants the thing up there. Everybody's sold out, and price is going to go down. Really? Well, 4 bars later, the price had gone, something like 40 pips higher from where the pin bar started. So about 20 pips over the top of that pin bar. In total adverse move to, you wouldn't call it best practice, but what a lot of folks would say that teach trading pin bars. So you could say, well, that's a bunch of horse shit. Well, it depends on what time frame you're on. You know, if you're looking at a 4-hour time frame here instead of a 15-minute, this doesn't look like much. So how do you know what to do? How do you handle that? Well, if you're in a long position and that pin bar goes and then slams back down against you, and you're, for example, trailing your stop, that's going to get popped, right? And in fact, if you're new to the trade and it goes through that and slams down, it could very well go through your entry point and catch you on the entry stop level. So how do you avoid that? Well, you don't. Because that's just one of the things. I mean, you're going to walk around in the woods, and you know, every now and then you're going to trip on something and maybe fall, or it's going to rain and you're going to get wet because you forgot your raincoat. I mean, those are just things that we get caught at, and so you have to prepare for that. If you're going into trading and you're short stacked on your money, it's the same disaster that you're facing if you go and sit at the poker table and you're short stacked. Remember, we're all short stacked as retail traders. The large institutional traders and funds dwarf us. They're 85% of the market, of this $6.6 trillion a day market. And so just by definition, we're going in short stack to the game. Now, can you survive on a short stack if you go into a poker game? You certainly can. You have to pick your hands that you play very carefully, and you have to be willing to go all in when things are moving in your favor so that you can build up the size of your bank. Not to compete with the larger players, just to build up some dry powder so if you take a hit, you don't go to the wood on your own original account. And that's the game that we play in trading. The problem when you first start learning to trade, or you've been trading for a year or something like that, and I'm talking about serious trading, not shitting around with a $500 account or listening to signals or all the other crap that's out there, but serious trading, you've had some instruction or you've got a general idea of what's going on. You're still not good enough in order to avoid that stuff. And so, and pin bars aren't the only thing that can ruin your day. There's a lot of other little things. And you're not going to be able to avoid them. And so the question becomes, if you're not really adept at trading, if you really don't understand the mechanics and the fluidity of price action, then you're going to lose more often than you're going to win, or at least your win rate is going to be, 55, 45, it's not going to be very great. And you probably have a tendency to cut your winners, and sometimes the losses run, and a pin bar there will just do you in. A lot of the best advice is if you're day trading, you set a 20 pip stop or a 30 pip stop as your panic stop, and you trade within that. If it goes against you, if you're going long and the price goes down against you and you're out of the money, you still start buying down there, because then when the price retracts back up, you make all that money back. You increase the value. Well, yeah, but you really have to know what you're doing. And a lot of people are teaching that stuff to people who don't know what they're doing yet. They don't have the experience to judge when it's prudent to do that and when it's not prudent to do it. I do it, and I get stuck sometimes for astronomical amounts of money. But I've got dry powder. And so I can evaluate the situation and say, well, I just got caught by an anomaly here. In the long run, this is what the price should do. I mean, I've been looking at this stuff since 2007. And so I can look objectively at that price action and say that's not a sustainable move, and eventually it'll come back. Now, it might not come back today or tomorrow or even next week, but eventually it'll find its way back. And that's where I've said on these videos that a lot of times I don't get paid on a daily basis for that risk that I've taken. If I win $1,500 over a 10-day period of time, I've actually won $150 on a daily basis. And based on my bank size, what is my expectation that I could win on a daily basis? Maybe that's $250 or $350. And so to win only $150 as opposed to $300 or $350 is a 50% drop in my expectation for my daily profit that I'm capable of getting. And so that becomes problematic. Unless you're able to look at it from the big picture and say, well, wait a minute. I just made $1,500 on whatever size bank that is. And if I'm not compounding, if I'm just doing simple returns, it's easier to calculate what that effect is over the course of your bank. $1,500, if you're, let's say you're trading a $10,000 account, you just got really lucky and you made $1,500. I mean, that's a huge amount of return. That's 15% return in 10 days. But it might not equal what you're capable of, like I said, on a daily basis. And so you have to balance those two things. In the beginning, when you're a beginning trader and you're taking those kinds of hits over and over again, and you don't have the long view, and you don't have the experience or the dry powder to wait it out for the 10 days and do these carry trades and come out of it okay. And remember, when you're doing carry trades, if you're going the wrong way, the carry interest is against you. It's not for you. And so, some of the trades when I'm doing my thing, I'm losing, based on my size, I'm losing $20 or $25 a day in carry interest. And when you go through the weekends, it's like $60 or $70 that I'm losing in carry interest. When I was trading a smaller account, I think I was trading a $10,000 or $15,000 account. No, I was trading a $30,000 account. I made $500 in carry interest for the year. That was pretty good. I think this year I've probably lost, I probably lost $1,000 in carry interest. Well, yeah, I'm not whining about it, nor should you. You just have to be aware of it. I mean, you go to your job and you make $100,000 a year, you're going to lose 15 or 20,000 or 25,000 of that to taxes. What are you going to do? You're going to whine about it? You're going to pay the taxes. And so the carry interest is what you have to pay. So now, for example, instead of $1,500, I lose $300 of that. Now I'm $1,200 or $120 a day over the 10-day period. But again, if you don't have the skill to do that and to rationalize these values, then when you get caught by these pin bars and things like that and you're short stacked, you become despondent and your trading falls apart. So the point is, you can't put yourself in that situation to get crapped out by a pin bar. If you're early in your trading, whether you're trading a $1,000 account or a $200,000 account, if you get hit like I did with a $40,000 account, that original large live account that I had, I lost the statistical 6 losses in a row for my win-to-loss ratio at the time. Was highly likely in a period of trading. And I've been trading a lot the year before, smaller accounts and all that other stuff. And so I was trading, so at some point I was going to hit those 6 losses in a row. I hit 6 winners in a row too. So I started in January of that year with this fresh $40,000 account. And within the first 10 trades, I lost 6 times, and I lost big. I mean, I think those losses amounted to like $12,000 or $15,000 out of my $40,000 bank. I got hit badly. I've lost $12,000 or $15,000 aggregate many times over other trading periods, but I'd already made $10,000 or $20,000. Or maybe I was going to make that $20,000 or $30,000 later to balance it out. Because again, you got to look at trading over the long run. But when you're inexperienced, that's why my advice is trade with a $1,000 account, set a fixed stop value so that things like these crazy pin bars and shit don't damage you. And yes, you are going to lose money because of that short stop, but you're going to learn. I mean, you lose 10 times in a row in a mini, you've lost, say your stop's at 10 pips, right? And so you lose 10 times in a row. So you've lost 10 times, you lost $100 out of your 1,000. Well, $100 is, my wife and I went out to dinner the other night at a relatively inexpensive restaurant. It was $110. So, you don't get to go out to dinner. But what will happen with that smaller account is that you'll learn what not to do. And it isn't so much what not to do, it's when not to do it. I mean, that's really the critical thing. You've got the what, the how, and the when. Any dumbass can learn the what, and most are quite capable of learning the how. Now, how do you do stuff? Now, the fact that you're wasting your time learning how to use Bollinger Bands or moving average crossover systems or whatever the hell it is, engulfing candles and pin bars and all that other crap, and wasting your time with all that stuff is still something that's within the realm of everybody to learn as to how to do that stuff. But what's not taught is the when, and the reason for that is it's very difficult to teach the when if you have people banging on your door that just want to know, give me the 3 entry rules that I need to know so I don't get screwed. There is no such thing unless you understand that important concept of when. When is really, really critical. And that takes experience to learn. And so my advice, so that you don't get caught in these pin bars and wring your hands with angst, is to trade with a $1,000 account and have this kind of thing happen to you and go, whew, boy, am I glad I had a short stop on that because I only lost X amount. And that short stop has to be up to you. It has to be based on the ATR, the currency pair that you're trading, and it has to be based on your confidence that you're not going to change the statistics. You have to change your game to meet the statistics. And that by trading that $1,000 account and taking all those short hits, eventually you're going to learn what not to do. And part of that isn't so much, well, I'm going to avoid situations where there could be a pin bar, because you have no conscious or unconscious way of doing that. There are other ways that you mitigate that risk, and there are other ways that you make up for the times when that will occur. You just have to take that out of your whole plan. You can't even think about that when you're getting involved in trading. If you're worried about shit like that and you're under a year of trading, you're wasting your time. You're studying the wrong stuff. You won't know what to do when you get hit with that. And so, you can take my advice or not, I don't care. This is for entertainment purposes only. I hope you're enjoying the presentation. Don't listen to a thing that I have to say. This is what I do. This is what I learned what not to do. That's what I'm trying to help you with. It's up to you as to whether you want to believe it or not. And again, doing this stuff in a written form or in a video or whatever is not of much benefit to you, because unless you're doing it and you have somebody there to guide you and talk you through some of this stuff, it's going to be very difficult to learn. You're going to have to lose a lot of times in order to pick up stuff that somebody looking over your shoulder could say, well, the reason you got stuck with this was because of this. And that advice too often comes from people that are just looking at that particular situation. Oh, you could have got in here and then that. Yeah, but that's in hindsight. Man, that's the last thing I teach when I work with somebody is hindsight. That's why I don't, in this video channel, I don't put up charts or anything like that, because that's all hindsight. I teach principle-based trading as a process. And that's the way you're going to have to learn it, or you're not going to be successful. I'm sorry, the odds are 90% against you. 90% of the traders, this is an analysis that a large major FOREX broker did many years ago on 43 million of their client transactions. 90% of the traders lost 90% of their money in 90 days. I call it the 90-90-90 club. That's the odds that are against you. They say if you get into a car accident, the odds of you being injured if you don't wear a seatbelt are 70% or 80% or whatever that is. Well, you wear a seatbelt. Maybe you're never going to get in an accident, but you mitigate that risk by wearing a seatbelt. So if you don't know how to mitigate risk correctly, pin bar is going to catch you. Peter Rose Longwood Currency Trading. Have a great day and have a great trading day.